Good evening, students. Welcome to the session. So today we have the session on very important topic for the CA final, and that is profit and gains from business or profession, right? It's a very important topic. So you have to be very serious with this topic. We will try to cover it from very basic points, students. And what I want you to do is you have to consistently write the notes for this session. So I don't want that you are not writing the notes. We will also be sharing these notes. That is not no doubt about it. But what I want you to do is essentially make your own notes, students, because the moment you will start writing, it will get registered in your brain. I've been telling you, students, that maintaining these notes is going to help you for your last day revision also. So please request from my side that kindly maintain your notes. Are we clear? All of you will be maintaining these notes the way I am writing here. You will be writing in the similar manner. Yes, everybody with me? Okay. Yes, Yogesh, very good. Yes. So before starting this important topic, let me give you an idea how this topic is going to be asked in the examination. So number one, students, this particular topic can be part of the full-fledged question. Okay, so it will be part of a full-fledged question, an entire 16 mark, 10 mark question, wherein you will be tested on the adjustments, what we are going to learn over here. There can be case laws around these particular chapters. So theory question can be there. Most probably practical question will be there. Okay, so this is how the question will be asked in the examination. Now, even post examination, like once you qualify as a CA, this is going to be a very important chapter. So the basics that we are going to set today and in the coming next lectures is going to form your entire life if you are practicing in direct tax, international tax, right? Because this is a very conceptual chapter. Now, having said this, let us quickly start with PGBP. Okay, so first of all, tell me, what is a business? Profit and gains from business or profession. So what is a business, student? Yes. What is
By
a
trading of goods, giving any services, manufacturing any product and selling them, any
okay?
commerce,
Is
whether for
business
profit or
defined
not.
under Income Tax Act?
Uh, yes,
Yes. Is it defined?
yes, yes,
What does it say? Any trade, commerce, manufacture. Yes, Sandeep.
natural
Section 213. Yes, that's right.
13.
Yes. So let us look at the Income Tax Act as well simultaneously, because that's what the approach I follow to teach you, so that you know which section says what. Okay. So 213, business includes any trade, commerce, manufacture, or any adventure or concern in the nature of trade, commerce, or manufacture. So let us write it down. Section 213 defines the business. This is an inclusive definition, right? Trade, commerce, manufacture, or adventure in the nature of trade, commerce, or manufacturing. Okay. So, first of all, we will spend some time here to understand what is the business meaning. Okay. We'll spend some time over here. And then we will proceed further to understand that what is then the profession and the balance of sections of PGBP. Okay. So, tell me one thing, students. What is trade? Yes,
We
what
are
is
we
trade?
are pur- we are purchasing something and we are selling it, whether for profit or not. But we are purchasing something and we are selling.
Okay. So basically, buy sell of goods. What is commerce? Trade, commerce,
Acting like
manufacturing.
an agent, acting like an agent, principal agent, kind of thing.
Not actually like agent or something like, you know, doing any kind of business activity for commercial purposes. Like trade is, buy sell of goods. Okay. Now, I may not be necessarily that I am only a trader. Okay. So I can be trader, I can be manufacturer. So trade and manufacturing are included. Any other business that I not essential, but I'm doing the other activities, other sort of activities. So in that particular case, like let's say for example, I'm not into trading, I'm doing job work or I'm doing agency. So commerce is a very wide terminology, right? So what they've said is any kind of activity that I am undertaking for commercial purposes that will fall within the commerce. Now these terms are not defined, meaning we are understanding these as how the concepts have evolved, judiciary has interpreted over the period of years. Okay, so this is what is trade, commerce, or manufacture. Now, coming to adventure in the nature of trade, commerce, or manufacture. What does this mean?
It means that not continuous business, but just one or two transactions doing.
Yeah. So, one time activity. Yes, adventure is right, one time activity. So, let's say, for example, that tomorrow I, you know, make a one of a kind sale of, let's say, land. Does that mean that I'm doing business?
No, ma'am, it is capital gains.
It is capital gain. So, you said that one of a kind, if I'm doing, that is adventure in the nature of trade, commerce, or business. So
So
why it is not business?
nature of the land. Land is our capital asset, which is not our stock in trade.
Okay. So let's say, for example, then I'm selling the land and this is my business of doing. Like I basically buy the land, sell the land. So this is my business. So then in that particular case, is it still a capital gain?
Oh, ma'am, then it will be business income, right?
It's a business income. So then what is the difference between the two? Like if I say that if I'm selling one of time also, so then you are saying that it is the nature of the asset is capital asset and therefore it should be capital gain. But if I say that when I am into the business of doing that, then you are saying that no, you are actually into the business and therefore it should be the business income. So what is correct? So let us understand that how one has to determine that whether we are into the business or whether we are into the earning any income from other sources or whether we have the capital gain or whether it is income from house property. How do you put your like what is essentially my business? Now this is very important therefore. So if you look at here the definition of the business over here in 213 is an inclusive definition, right? It is an inclusive definition which we have. Now, this is basically to like put any kind of business into this. It can be trade, it can be any kind of, licensing business, any kind of manufacturing business, right? So the definition of the business is inclusive and not exhaustive. So it includes trade, commerce, manufacture, any adventure in the nature of trade, commerce, or manufacture. These are just major head, but they are not exhaustive to say that only these activities will be reckoned as business. Right? So the business has to be understood in a wider content. Okay. Now, the Supreme Court have in many cases pointed out that activities which constitute carrying out of business need not just be restricted to this, they may be of different characters. The word business is of a very, very wide import. Now, since the profession is separately defined, therefore we are not putting the profession over here. But what business means is that an activity carried on continuously and systematically by a person by the application of his skill and labor with a view to earning an income. Are we getting it? So any kind of systematic activity which involves the skill and the labor, that is what will be considered as my business. Are you getting this particular point, students? Yes or no? So any activity which involves the, like putting any skill into it, let's say I'm repairing some furniture, I'm constructing some building, there is a labor and the skill involved. Right? So even if I'm, let's say, dealing in the property, where I am taking the land or buying the land, dividing it into different pieces to make it sellable, or constructing certain shops or offices or any houses onto that, this is a business income. But when I am doing only one of an activity, that may not be the business. Are we getting it? So the business which is there is basically an organized activity. What is it? It's an organized activity. So what are the characteristics of business? Continuous and organized exercise of the activity. Just write down over here. And systematic activity. Second is involves skill and labor with intention to make perfect. Yes or no? So these are the characteristics of the business. So where I am, like, let's say, for example, there are, companies which are engaged in, let's say, hiring the manpower. That is also business. Let's say there are companies which are only purchasing the raw materials. That is also a business. So whatever there is, there are continuous series of transactions wherein I am doing some kind of organized activity which is intended with the or which is involving some kind of skill, some kind of labor, then this can be considered as the business. Yes or no? Is this clear? Yes? Any
Yes, ma'am.
question, doubt? Okay. Now, if let's say, for example, I have, let's say, been selling the properties. Okay, I have been selling the properties as I was telling you. Now, selling of these properties, if you look at it, or then it should be capital gain. But if I am doing an organized activity, if I am doing a continuous activity of that with an intention to make the profit, right, it is considered as the business and not the capital gain. Are we clear? Or let's say, for example, I have developed the properties and now I'm renting it out. So letting out of the properties is my business, right? Now, if you look at income from house property, it says annual value of the property shall be chargeable under IFHP. So if I'm renting out the properties, will it be considered as my business or will it be considered as income from house property? Yes. Sandeep says IFHP. Why? Yes,
And
what is
if we are keeping another person or labors to get collect our rent and everything, and we are also looking at the premises like security services kind of thing, then it might be business income. If not, then it might be income from house property.
if you're hiring somebody else? See, even if you're hiring somebody else, then also it can be IFHP also. So yes, see, the Supreme Court in Chennai properties case, Supreme Court in the Chennai property case had held that renting out of the properties, if it is the intention, if it's business of the assessee, then in that particular case, it will be considered under PGBP and not under IFHP. So, Supreme Court in Chennai property case, this case is also there in your module, had held that if the assessee, if the business of the assessee is basically to sell the, 1 second, let me just make the phone on silent. Yeah, I'm sorry. So the Chennai properties case was basically the Supreme Court looked at the memorandum of association of that company and observed that the company's business was to hold the properties and then let it out for the business purposes. Right. So basically, they were into the business of holding the property and then letting it out. So from the memorandum, they gathered that it was the business of the assessee. So holding of the property and earning the income by letting out those property was the main objective of the company. And therefore, looking at the memorandum of association, the Supreme Court in Chennai property held that the income was taxable as a business income and not under IFHP. Similarly, in Raila Corporation also, the Supreme Court held the same thing. However, in Raj Dadarkar and Associates, all these three cases are present in your module. Let me show you. Are you able to see the screen?
Yes, madam.
Yeah. So in Chennai Corporation, same held. However, in Raj Dadarkar and Associates, the Supreme Court did not find any evidence regarding that whether the partnership deed mentioned that the objective of the assessee was to let out the property. And therefore, the Supreme Court said it is not evident that the objective of assessee was to let out the property. Therefore, it will not be PGBP, it will be IFHP. Are we clear? However, now Section 28 has introduced an explanation. This is amended through Finance Act 2024. Now, this is specifically clarified that even if it is my business, to let out the residential property, the income will not be PGBP, it will be IFHP. But this is only in respect of letting out the residential house property. If I'm letting out the commercial house property, in that particular case, it will be considered as PGBP. Are we clear? Yes? So let's just write it over here. What does my section 23 says? Let us look at section 23. For the purpose, section 22. The annual value of the property consisting of any buildings or lands appertaining thereto of which the assessee is the owner, right? Other than such portion as he may occupy for the purpose of any business or profession carried on by him. Carried on by him, as in, let's say, for example, if I am occupying this house for my business, then I will not be charged under IFHP because I am doing my own business. But if I am doing the business of selling the house property, they are not talking about that. It is, they are accepting or creating an exception for the property used for my own business, right? My own office, my own home used for office, right? So other than the portion of property as he may occupy for the purpose of any business or profession carried on by him, the profits of which are chargeable to income tax shall be chargeable to income tax under the head house property. So section 22 says, annual value of house property is chargeable under IFHB. Fine. And if I am, or if an assessee is in business of letting out of house property, then Supreme Court in Chennai Properties and Raila Corporation has held that, held what? This will be PGPP. Right? However, if the objective is not to let out house property, then it is income from house property. This is again a Raj Dadarkar case. Right? However, now section 28, explanation to section 28 provides, explanation to section 28 provides what? That income from, let us look at section 28 explanation. What does it provide? It is hereby clarified that from letting out of residential house or part of the house by owner shall not be chargeable under that PGBP and shall be chargeable under IFHP. So income from letting of residential house is going to be IFHP, right? But this is only for letting of the residential house property. So that means income from letting out of commercial house property will be PGBP based on the Chennai property case. Now students, this can be asked as a part of a small case scenario. This can also be asked as a part of the adjustment to the full-fledged question. Are we clear, students? Yes or
Madam,
no? Yes.
ma'am, ma'am, I have a query, ma'am. Income from letting out of a residential house property for commercial purpose. Will it also be income from house property?
You see, income from residential house property will be, even if it is for commercial purposes, it will be under IFHB. So the purpose is not
Okay.
important. For what purpose they are going to use the property, that is not important. Are we clear?
Yes, ma'am.
Okay. So the business word is therefore of a very, very wide import. Are we clear? It includes trade, commerce, manufacture. Are we clear? And adventure in the nature of trade, commerce, or manufacture. Now, when it comes to adventure in the nature of trade, commerce, so it means that a single transaction can also constitute an business activity. So if I'm doing a single activity, but that is an organized activity, that will be considered as a business. But it should involve systematic or organized activity. Right? So let's say, for example, if I am doing a one-off kind any transaction, that is fine. That can be considered as the business activity. That is the reason why they use adventure in the nature of trade, commerce, or business. Are we clear? So, but it should not be like an isolated transaction. So, even though a single transaction can constitute the business activity, but it should not be, like a one of a kind isolated transaction. So basically what they are trying to say is in the adventure in the nature of trade commerce is basically any kind of, let's say for example, I have done some short time assignment, right? Or let's say for example, where, I'm doing for a limited period of time, or I'm doing certain incidental activities to my business. Right? So these are the cases of the adventure in the nature of trade, commerce, or business. So let's say, for example, where I have a land and I've divided into plots to make it sellable. Now, these transactions cannot be treated as adventure in the nature of trade, commerce, or business because I did not acquire the intention of resale. I'm not able to, use that land. There is no sellability. So I thought that I'll, break the land into different plots and I'll sell it. So merely because I'm selling the land in parcels, just to dispose that off, it is not in the nature of trade. It is not an adventure in the nature of trade because I'm just, finding a convenient mode of realizing the value of that land. Are we clear? Because this is a capital asset. So this will be classified under capital gain. Yes, if I am into my real estate, is to be into the real estate business, then yes, it will be considered as the trade, commerce, or business. Are we getting it? Let's say, for example, that where, for example, I'm doing some incidental activities to my business, where my, let's say, business has been organized for a very short period of time, that could be adventure in the nature of trade, commerce, or business. Are we clear? Any questions, any doubts so far? Yes? Is this clear, students? Yes? So, how do we decide whether it is a business or not? We need to decide on the basis of the character of the transaction, right? We need to decide on the basis of the intention, whether my intention is to do the business or whether the intention is to just activity for one of kind. What is the magnitude of the transaction? What are the processes that it involves to do that activity? What are the operations that it involves? What is the period of time during which I am doing that? Right? So all of these will will lead to a conclusion that whether we are doing business or whether we are doing any other source income. What is the ultimate nature? What is the ultimate intention to do that particular thing? Clear? Any questions, any doubt? Fine. So, adventure in the nature of the trade, commerce, or business is basically isolated transaction, but only when the transaction is having the intention of doing the business. When I'm doing the purchase and sale of, let's say, property within a short period of time, with the intention to make the profit on that. So, the intention is important for characterizing it as adventure. Clear? Yes or no? Yes? Any questions? Any doubt? Fine? Okay. Perfect. Now, what is profession? What is a profession? Yes. Requiring any degree, okay, or skill, that is right. Yes. Okay, let us look at what is the definition of profession. Is profession defined? Yes. Is profession defined? Not defined? It is defined, yes. Under which section this is defined? 236. Profession is defined under the Income Tax Act. Which section is this? 236. Let us go there. Yes, Geet, that's very correct. So, profession includes the vocation. Again, this is an inclusive definition which has been given. Profession includes the vocation. Now, what is the meaning of, therefore, the profession? It is not defined. It is not clearly defined. But what does it mean? That, as you rightly pointed out, that it involves some degree of skill. It involves some degree of the having some professional qualification. Right? So that is what is the meaning of profession. We have to understand that in the context of what it is mentioned over here. So profession here means that profession is in respect of some degree of skill, some degree of education through which this particular qualification has been achieved. Right? So can be law, can be related to accountancy, engineering, architect, right? Now, this is also very, very, very important to classify whether you are a professional or not, because there is one section which is specifically for the professions. Can anybody tell me which is that?
44 ADA.
Correct. 44 ADA prescribes the special provision for computing the profit and gains of profession on presumptive basis. So only when you are a professional, only then you can say that okay, I will claim 44 ADA. Otherwise, you'll go to 44 ADA. Are we clear? So profession is understood in a way that there is some kind of qualification. Right? There is some kind of a skill which is there. Are Instagram influencers professionals?
No, ma'am.
Why? Why are they not
No education
professionals?
qualification. No professional qualification required for that.
Profession is not defined in that. It is defined, Sandeep. Instagram influencer is the profession, Sandeep. See, I don't think Instagram influencers are professional because, as rightly pointed out, that they may be engaged in an occupation, but a professional qualification involves some intellectual skill, higher education and learning, and some training for that profession. So that their activity is entirely based out of skill. Right? So that is what the professional is. Instagram influencers are doing, whatever they are doing out of the skill that they have, but that is not a trained skill. Whether actors are professionals.
Yes, ma'am. They have school also kind of. I
Correct.
exactly
But
I
what if
don't
they have
remember,
not
but
gone
they
to
have
any
school.
school? They have not gone to any school.
Then even then it is a profession.
Even then, it is a professional, right? So the professional, again, they have some skill. It is not important that I should have gone to particular school. Okay. Now they can be classified as professional. They are undertaking their vocation. Yes. So even on that logic, one can say Instagram influencers are also professionals, but the answer is no. One can say that they are exercising their vocation, but it is not something, vocation again is born out of some skill, right? It is born out of some kind of specialized skill. But as Instagram influencers, they are not having that intellectual or specialized skill. So therefore, in that particular case, they cannot be considered as the professionals. Are we clear? Yes or no? So profession involves that there has to be some sort of organized activity which is arising out of the skill that you possess. That is what is the profession, or even for that matter, the vocation which may be there. Clear? So business or profession. We have understood the meaning? Yes. Now let us move to section 28. Okay. Now 28 says profit and gains from business or profession. Okay. Let us go back to 28. So following income shall be chargeable to income tax under the head profit and gains of business or profession. Okay. Now tell me, before I start even 28, let me know what is a difference between, or when can the income be chargeable under the head salary, and when can the income be chargeable under the head PGBP, sorry. So we have done the distinction between IFHP and PGBP. tell me about salary versus PGBP. How will you differentiate between the two?
In salary, there should be employer-employee relationship. Then only
Hmm.
it will be chargeable under the head salary.
Okay, yes. So employer-employee relationship is important. The salary is like the contract of service. Whereas the business is what? Contract for service. Right? So for salary, for section 15, what is important is to have is the employer-employee relationship. Basically, the contract of service. Whereas this is contract for service. Whether you are subject to the control, the directions from the employer or from any person, right? That determines that whether he is your employer or whether you are working independently. Are we clear? Yes. Now, tell me one thing. What is the difference between the income chargeable under the head capital gain and the PGBP? Because right now we were dealing with the, let's say, sale of the land. You said it is a capital asset. But when can the income therefore be under PGBP? When you are doing the organized activity and these are not one of the transaction. For example, holding of investments. Holding of investments and selling those investments. Whether it will be capital gain, whether it will be PGBP.
Capital gain.
Capital gain or PGBP, yes.
Uh, if it is a transfer of the capital assets, then it will be capital gain.
Yes. If it is a transfer of capital asset, it will be capital gain. But let's say, for example, I am doing the trading in securities. Then whether it is capital gain or PGBP?
Then it will be PGBP if you are doing trading in securities.
Yeah. So what is important is that what is my intention? Yes, what is my intention? That is to be considered. Yes, Pitambar. So basically, when you look at the capital gain versus PGBP, what you need to look at is that section 214, first of all, the definition of capital asset excludes the stock in trade. Right? The definition of capital asset excludes the stock in trade. Except in the case of, can anybody tell me? Except in the case of the, yes, can anybody tell me? Very good, Sandeep. For the foreign portfolio investors. So in the case of the foreign portfolio investors, if the shares are held as stock in trade, it will still be classified as income under the head capital gain. So in case of the FPI, even if securities are held as stock in trade, still income from transfer shall be capital gain. Are we clear? So this is how you have to link and study, students. It's not like that we'll go into the capital gain class, study there in an isolated manner, and then again, here we are only doing PG. It can't be studied. It has to be linked everything and then studied. Are we clear? So 214 capital asset excludes the stock in trade. Pitambar, yes, you will get the class notes, but I request that you please write it here only because that will help you practicing. Okay. So capital asset excludes the stock in trade. So when, let's say, for example, you are holding any asset as a stock in trade, your income is chargeable under that PGBP and not under that capital gain. Because capital asset excludes stock in trade. So let's say, for example, if you're holding the property as stock in trade, if you're holding the investments as stock in trade, securities as stock in trade, it will be PGBP and not capital gain. Except in the case of FPI, where FPI are holding the securities as stock in trade, even in those cases, it will be considered as capital gain. Only for FPI. Clear? So how do you consider if, let's say, for example, I am categorizing in my balance sheet it as investments only. I'm not categorizing it as stock and trade. Will it be the case that, my category will decide that what it is, that whether it is a business income or capital gain? Answer is no. How will you decide whether it is stock and trade for the assessee or whether it is actually the capital asset? So you look at the intention, nature of transactions, motive, magnitude, then you look at the quantum, right? So these characteristics will decide that whether the assessee is dealing in the trading of shares or securities or he is holding it as a capital asset. So there is a CBDT circular also for this, which says that to classify whether the transaction from whether transaction of sale and purchase of securities is capital gain or PGBP. Are we clear? So you look at nature, volume, quantum, magnitude of the transaction to classify whether it is the capital gain or PGBP. Are we clear? However, in case of the intraday transactions, in the case of intraday transaction, what it is, whether it is business income or whether it is capital gain?
Business income.
Sorry, what it is?
Business income, PGBP.
Yes, it's business income. Yes, Sandeep, it is the speculation business income. Not only business income, but it is the speculation business. See, this is very important. How we are directly jumping from 28 to 43. I will not take 43 in isolation. Right? So speculative transaction is defined under 43.5. What does it say? Speculative transaction means a transaction in which a contract for the purchase or sale of any commodity, stocks, shares is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scrips. So, what is a speculative transaction? It is basically the transaction settled otherwise than the actual delivery. Are we clear? Yes or no? So this is basically nothing but my intraday. Now, purchase of derivatives. Purchase or trading in derivatives, whether that is speculative transaction.
No, ma'am.
That is not speculative. It is not. If not done for hedging. Okay. So let us look at what it says. Provided that for the purpose of this clause, a contract in respect of raw materials or merchandise entered into by a person in the course of manufacturing or merchanting business to guard against loss through future price fluctuation in respect of his contracts for actual delivery of goods manufactured by him or merchandise sold by him. So basically commodity derivatives. A contract in respect of stock and shares, stock derivative, security derivative, entered into by dealer or investor therein to guard against loss in his holdings. A contract entered into by a member of a forward market or stock exchange in the course of any transaction, the nature of jobbing or arbitrage to guard against loss which may arise in the ordinary course of business. And eligible transaction in respect of trading in derivatives carried out in a recognized stock exchange. An eligible transaction in the respect of trading in commodity derivatives carried out in recognized stock exchange shall not be deemed to be a speculative transaction. Are we clear? So the trading in derivatives, the purchase of the commodity derivative to hedge are not the speculative transaction. So whether you do trading or hedging through derivatives, this is not the speculative transaction. This is the exception. Are we clear? Yes or no? Yes. Now, why is this important? Intraday is the speculative. Intraday is speculative, students. There's no doubt about it. What is not speculative is the derivative. Now, why is it important to decide whether you are doing a speculative transaction or a normal business transaction?
Tax rates are different for both of them.
No, tax rates are same.
Losses from the speculative business cannot be adjusted to normal PGBP income.
Correct. Very good. Yes, Geet. Correct. So, the losses of the speculative business are only to be set off against the speculative business income. Remember that. So the losses of the speculative business are only to be set off against the speculative business income, cannot be set off through the normal business income. So first, let us look at 73, sorry. Losses in speculation business. Any loss computed in the respect of a speculation business carried on by SSE shall not be set off except against profit and gains, if any, of any other speculation business. So the speculation business loss can only be set off against the speculative business income. Are we clear? Yes or no? So this is very, very important to classify whether the business is a speculative business or it is a normal business. one explanation which is very important. What does it say? Where any part of the business of a company, it is only talking about the assessee being a company, other than the company whose GTI consists mainly of income which is chargeable under the head interest on security, IFHP, capital gain, income from other sources, or the company the principal business of which is the business of trading in shares or banking, mean except this company. So where any part of the business of a company consists in the purchase and sale of shares of other companies, such company for the purposes of this section shall be deemed to be carrying on a speculation business to the extent to which the business consists of purchase and sale of such shares. So basically we'll write it over here, where a company, this is only for the assessee being a company, purchase and sell shares of other company, where the business of the company consists of purchase and sale of shares of other companies, or where you can just write like this, where business of company business of company involves purchase and shares. Of other company. Then in that particular case, this is considered as speculation business. Section 73. And what is the exception to this? The exception to this is where the income of the company, or where the gross total income of the company consists mainly of income from interest on securities. Next, income from house property, capital gain, income from other sources, or a company the principal business of which is the business of trading in shares. So what are the exceptions? One is where the GTI of company mainly consists of this. The second exception is where the business of company is the business of trading in shares. Is trading in shares or banking. Right? So in these cases, it will not be considered as a speculative business. So what they are saying is if the company involves purchase and sale of shares of other company and it is not a trading company, it is not a company which is trading in shares, then it will be considered as speculation business. Whereas where the GTI of company consists mainly of interest on security, IFHP, capital gain or the principal business of company in shares or it's a bank, then in that case, even when you purchase and sell the shares of other company, it will not be considered as speculative business. Are we clear about this, students? Yes. Any question, any doubt till now?
Ma'am, suppose a company is doing trading, okay? If that purchases some shares of another company, then if he sells after 1 year or 2 years also, then it will be speculative business for that company, right?
No, you said it's doing the trading, right?
Uh, yes, ma'am.
So if they're just doing trading, it is not a speculative business.
Not trading in shares, it's selling of goods and normal goods kind of thing.
Yeah, then it can be speculative. So what it says is that where the business of the company involves, right? Where I have the business, it is not that I'm holding it as a capital asset. If let's say for example I'm doing the trading business, right? Trading of normal goods. Now if I'm doing the trading of normal goods and I'm also purchasing and selling the shares of other company, then it is a capital gain. It is not business income. Where the business of the company is just to purchase and sell the shares of the other company. Right. So what does it say is where any part of the business of a company consists in the purchase and sale of shares of other companies, then it will be considered as the speculation business. Are we getting it? So
Yes,
if I'm
ma'am. Okay,
engaged
ma'am.
in the normal business activity, right, in that particular case, it will not be considered as my speculation business. The speculation business income will arise only when the business or any part of the business of the company is to do what? Is to purchase and sell the shares of the other company. If that be the case, it will be speculative. However, again, there is some kind of exception into it. What is the exception? Where the GTI of that company mainly consists of interest on securities, the IFHP, capital gain, or the income from other sources. In that particular case, it will not be considered as speculation. Or the principal business of the company. The principal business of the company is, you can write like this. I'm a little bit modifying for your easy understanding. Where the principal business of the company is trading in shares, banking, or granting of loans and advances. Then in that particular case, I will still fall within the exception because it says if the principal business is the business of trading in shares, banking, or granting of loans and advances, then in that particular case, it will not be considered as the speculative business. Are we clear, students? Yes or no? So what is speculative is? If I am doing any kind of transaction which is involving the taking the goods, without delivery, if I'm doing the transaction, the contract which is there, then in that particular case, it will be considered as the speculation. Are we clear? So basically, all my intraday is speculation. The intraday is speculation. What is not speculation is the purchase of the derivatives or the trading in derivatives. Hedging through the derivatives is not the prop. Are we clear? Yes or no? Any questions? Any doubt? Yes? Okay, everyone. So we have written over here basically transaction of the sale of goods, sorry, not sale of goods, transaction or which involves basically the contract in respect of any kind of purchase which is settled otherwise than by the actual delivery. That is what will be covered under speculation. Are we clear? So this is very, very important because if you classify it in a wrong manner, then in that particular case, you will be not getting the benefit of setup of losses if it is classified later as speculative. So transaction in which a contract for the purchase or sale of any commodity, stocks and shares is settled otherwise than by actual delivery or transfer. Okay, so you can just little bit write over here. Transaction in respect of transaction in which a contract for purchase or sale transaction of contract of purchase or sale of any commodity, stock, shares is settled otherwise than the delivery of the goods. Clear? Okay, clear? Yes or no? So trading or hedging through the derivatives, including the commodity or my stock derivatives are all excluded. Forwards, futures, these are all excluded. Fine? Yes. So we have understood the distinction between salary versus PGBP, IFHP versus PGBP, and capital gain versus PGBP. One more important point with respect to the IFHP, which I would like to take it over here, since we are talking about the stock in trade. Now, if a property is held as a stock in trade, if a residential or commercial house property is held as stock in trade, this section 23 says what? That you can have only one property as two property as SOP. Beyond that, it will be DLOP, deemed let out property. Now, in the case of a builder, it is quite possible that what they do is they have like many flats left as is. Like the builder who constructs the flat, they may not be sold immediately. So 2-3 flats remain unoccupied and the ownership is with the builder because they have not been sold. They are not yet transferred. So in those cases, whether the annual value of the property will be considered, because whether they will be considered as deemed let out property, if they are considered as deemed let out property, then the builder will be charged. in respect of the annual value of that property for which it should have been let out. Now, this will cause hardship to the builder, isn't it? So, therefore, section 23, it says what? It provides an exemption to the builders in respect of the annual value of the property held as stock in trade. What is the exception? Let's look at it. Very good, Sandeep. Yes, that's the very rightly put exception which you have said. Yes, Sandeep, that's right. Yes. 23.5. Where the property consisting of any building or land appurtenant thereto is held as stock in trade, and the property or the part of property is not let out during the whole or part of the previous year. So, where the building or land is held as stock in trade, the annual value of such property or the part of the property for the period up to 2 years from the end of the financial year in which the certificate of completion of the construction of property is obtained from competent authority shall be taken to be nil. So, what does it mean, students? So, it means that section 23.5 says that where the land or the building is held as stock in trade and is not let out. Right? So, in that particular case, the annual value shall be nil. The annual value shall be considered as nil for the period of up to 2 years from end of the up to 2 years from the end of the financial year in which completion certificate is received. So what is completion certificate? So when the builder completes the building, in all the cases where the building is finished, the project is completed, the municipality issues the completion certificate to the builder. Right? The municipality issues the completion certificate to the builder. So 2 years, up to 2 years from the end of the financial year in which completion certificate is received, the annual value shall be considered as nil. Are we clear? So when it comes to the renting out of the property where my business is letting out of the property, the Supreme Court in Chennai property and Raila has held that it will be business income. Looking at the memorandum of association, that the objective of the assessee was to let out. However, if the objective is not to let out house property, it is IFHP and not PGBP. However, this has been overridden by the explanation to section 28, which now says income from letting out of the residential house property is IFHG, but income from letting out of the commercial house property still can be PGBP if the objective is to let out the house property. If the objective is to let out the house property, then Chennai property case will still be available. Clear with respect to this? Any doubts till now? Any questions? Any doubt? Last one. PGBP versus income from other sources. First, let's talk about dividend. Let's say, for example, if I am into the business of trading in securities. Will dividend be chargeable under PGBP or IFOS?
IFOS, income from other source.
Why?
It is specifically said that income from other source, that it is a dividend income is income from other source.
Yes, very good. Yes, Sandeep, dividend is always IFOS. Geet, it will not be PGBP, it will be IFOS. The reason is, let us go to section 56. What does 56 talks about? 56 is the charging section for the head IFOS. What does it say? Let us look at it. So even when you are trading in the shares, the dividend that you receive will always be chargeable under the head IFOS and not under the head PGBP. The reason is very simple. Let us look at it. So 56.2 says, in particular and without prejudice to the generality of 56.1, the following incomes shall be chargeable to income tax under the head income from other sources, namely dividend. So dividend is specifically chargeable under income from other sources. Are we clear? So section 56.2 provides dividends are specifically chargeable under income from other sources, even if shares are held for trading. Are we clear? Secondly, interest. Now, interest is chargeable under PGBP or under income from other sources. Interest on securities. PGBP, Geet. Let us look at what does 56 says. Now, in respect of the interest, it says to income referred to in 22410. What is 22410? Let's look at what is 22410. Sorry, not 22410. It is specifically given, sorry. I think my net is working very slow. Give me a minute. I think either the website is slow of income tax, there is some problem. It is not. Yeah. They always go under maintenance. Okay, let it be. So 56.2 says that interest on securities shall be chargeable under income from other sources if not chargeable under the PGBP. So unlike dividend, which is specifically chargeable under income from other sources, the interest is not chargeable under income from other sources unless it is chargeable under the head PGBP. So first we need to see whether interest on securities is chargeable under the PGBP. If not, then we'll come to other sources. See, income by way of interest on security if the income is not chargeable to income tax under the head PGBP. So first you need to test whether this is chargeable under the head PGBP or whether it will go under the income from other sources. Are we clear? So let us take one case of Supreme Court. The case was that during the course of construction activity, the construction owner or the person who was doing the construction, the builder, gave some advances to the contractors. It is very normal course of business, right? You have to give certain advances to contractors to undertake the construction activity. And therefore, on these advances, he charged some interest. Now, interest on the advances paid to the contractors, whether this is the business income or whether this is IFOS. So, during the process of construction, the builder paid some advances to the contractors and they charged the interest for that. Whether this will be business or whether this will be the income from other sources.
PGBP income.
See, it will be PGBP, but this will be capitalized. Sandeep, the purpose was not to earn the interest, but this was during the course of the construction activity as a normal practice. These advances were given. So, until and unless the capital asset comes into existence, till that point, whatever expenditure you incur are to be capitalized. So the expenditure incurred in order to bring the asset into existence has to be capitalized. Are we clear? So basically, interest on advances paid to the contractors during the construction of plant and machinery are to be capitalized. These are the advances paid to facilitate the construction activity. And the interest is inextricably linked to the construction. The interest is inextricably linked to the construction activity. So any expenditure incurred or income received before the asset comes into existence has to be capitalized. So any expenditure and income incurred before the asset comes into existence has to be capitalized. Are we clear, students? Yes or no? This is basically the Supreme Court ruling in Bokaro Steel. Supreme Court ruling in the Bokaro Steel. So let's just write down. Now what about, let's say for example, if I have borrowed certain funds for the purpose of undertaking the business. Now pending utilization of the borrowed funds, pending utilization of the borrowed funds, I deposit these funds in the fixed deposits and earned the interest on the fixed deposits. Whether this will be capitalized, whether this will be PGBP, whether this will be income from other sources.
If the fund is borrowed specifically for acquisition or construction of any asset, then till the time it is available for use, it will be capitalized. After that,
See, here Supreme Court in Tuticorin Alkali decision had held that there are two parts to this transaction. One is borrowing of the funds to be used for a particular construction. Right? So these were the borrowed funds for construction of asset. This is one part. Now pending utilization, I deposited these funds in the fixed deposits to earn the interest. Now these were the basically surplus funds. Right? Now deposit of the surplus fund was with the intention of earning the interest on this. So this will be not my business income. This will be income from other sources. This will utilize because not inextricably linked to the construction. Your interest is from independent source. In the earlier case of Bokaro Steel, the interest which was there was not from the independent source. It was inextricably linked to construction activity. Here, the interest which was there was not from the independent source. Whereas, in this case, the interest on the surplus funds, this was from the independent source. So this will be IFOS. Are we clear? Yes, any question?
Ma'am,
Yes.
suppose in a business, if there are excess surplus funds, okay, then if a person deposit in FD and he get interest on that, then it will be from income from other source.
Correct. It will be income from other sources. Okay. Next case is,
ma'am, in this case, because just one confusion, because here also it is linked, because suppose a business cannot procure fund in piecemeal basis. Suppose I need a construction of, I cannot go to bank, okay, give me certain amount for 1 week, then after 1 week I need to pay, then give me after one. Business has to procure the funds by an estimation. One case. Suppose one point. Second is, suppose here they have put into an FT. When a business procures the fund, normally it goes into the CC account. So their interest is not earned but saved, because had a CC limit. So what will then happen? Interest saved on that CC amount?
See, interest saved on CC amount is not considered as income. This is like, my opportunity, like additional cost that I'm saving. Like if, or utilization of funds thoughtfully. Like let's say, for example, today I have an option. This is a investment decision that I make. Today I have an option to deposit the funds either in, let's say, shares or mutual funds, or I pay off my loan. Let's say I have home loan, I'm paying off my home loan. Now, if I pay off my home loan, my interest will get saved. Now, interest saved is not an income because I don't get a receipt of that, right? So that is the budgeting that I'm making. That is the investment decisions that I'm making to you, how I want to utilize my surplus fund. But that cannot be considered, something saved is not an income, isn't it? Tomorrow,
But
if you
I mean,
purchase something
suppose
on
company
discount, that is not your
A,
income.
sorry to cut down,
Yeah.
company and company, same case as in this case of Supreme Court in this alkalis. Suppose there is one company B which also procures the fund, and the surplus fund is there. Obviously, there will be, because fund cannot be borrowed in piecemeal basis. Now, this company deposited in FD to save the interest, because why to make the fund lying idle, and the other company put in their CC account. So
Yes.
the essence of the transaction is same, but they will be charged to income from other sources. They in other case the PGBP expense will be deducted.
Yeah. That is true. So, see, in one case, you are saving, you are technically not receiving any income. Like, income has to be followed by a receipt unless there is a concept of a notional income, right? Like, let's say, for example, DLOP. In deemed let out property, this is a notional concept that even when you don't receive in hand anything, there's a specific provision to treat it as a notional income. Whereas in case of like receipt of income, that is for sure, any receipt is an income. But unless and until there's a specific provision which says that any expenditure saved is also an income, you cannot charge it to tax. Are we clear? So there has to be a specific mandate under the law which says that any income expenditure that you are saving is also going to constitute your income. Unless we have that, we cannot consider it as an income. Clear?
Okay.
So in Tuticorin Alkali, the assessee had taken the loans from the bank. Obviously, he will utilize the loans in bits and pieces. Now the unutilized portion of the borrowed fund, he thought, why I should keep the funds idle? The surplus funds that are there from the borrowed funds, why I should keep it as idle? I will invest in the fixed deposits. Now the intention of the assessee was what? To generate the interest income. The assessee had capitalized this only, saying that pending my asset coming into existence till that time, my pre-incorporation or pre-production expenses will be capitalized and income will also get capitalized. So it was not offered to tax, but the Supreme Court said that the interest income is income from other sources because here the question is that what was your intention? Right? Here you were at liberty to use that funds, keep it at idle, or to deposit in the short-term deposits pending utilization. Are we clear? So how we apply the funds later on is not has nothing to do with the tax today.
Then
So
just one thing, one question out of this. So in how will we treat this in tax audit? Because suppose IAS 23 says the net of income shall be capitalized. Means whatever in that period, if you have earned any temporary income because of investing your fund, the net. But here it is saying that it will be charged to income from other sources. So in tax audit, we will have to report this.
yes, in tax audit, you will not report it as a business. It will go in your ITR as the income from other sources because tax audit is with respect to business. So you will reduce it as income chargeable under any other head, you have to reduce it and offer it to your income tax return under the income from other sources. So you have to show it in the section which says that any other income chargeable under the head, income from under any other head. Yeah.
So depreciation will also be affected because as per IS 23,
Correct.
the net amount will be capitalized. As per this, the gross amount will be capitalized and this will be charged to income. So depreciation amount will also have changed.
Yes, you will have to adjust the depreciation because your WDV will get adjusted. Right? In Bokaro Steel, the assessee's objective was basically, it was not objective to earn the interest by giving the advances to the contractor. It was a normal routine practice. Like in the construction business, you have to give advances. So assessee gave the advances and earned the interest on that. And therefore, since it was inextricably linked with the process of establishing, constructing the plant and machinery, such interest was incidental to that particular business. So interest was to be therefore capitalized because the advances were inextricably connected with the construction of the plant and the interest was just an incidental process to them. Was incidental to the work of construction. Are we clear? Next particular case is also very important. Let's say, for example, I have to make an export. I'm exporting the goods, and before I do the export, what we need to do is obtain the bank guarantee. Now, to obtain the bank guarantee, certain margin money has to be kept. So, margin money kept with bank to obtain the bank guarantee. Now, interest earned on this margin money, what would be its taxability? Income from other source or PGBP?
PGBP,
Why?
because it is related to my exporting of goods, which is my PGBP in
Correct.
nature. So
Correct.
interest earned on that will be also PGBP.
Correct. So, since I have to export the goods and for that I had to obtain bank guarantee. And bank guarantee, if I have to obtain, I have to deposit some margin money. So margin money was essential to obtain the bank guarantee, which was required to undertake the business contract. And therefore, interest on that margin money is also inextricably linked to business, and therefore it will be PGBP and not income from other source. Are we clear? Yes, Sandeep, very good. So let's just write it over here. The margin money was essential to obtain the bank guarantee for undertaking exports. So, interest on the margin money was inextricably linked to business. Okay, so therefore this is PGBP and not income from other sources. If I have deposited the surplus funds in the bank, then it is income from other source. If it is inextricably linked to business, PGBP. If it is inextricably linked to bringing the asset into existence, capitalize. Are we clear?
And if a company deposits FD in bank supposed to compensate for the shortfall of collateral, for obtaining the bank, then in that case, what will be happen? Suppose there is a norm that a company has to keep 10% of the total loan as a collateral, but the collateral value decreases, so it makes an FD for that shortfall amount. Then interest on the PGBP.
Yes. If it's anything inextricably linked to the business, it is PGBP. If it is linked to capital asset, capitalize. If it is interest on surplus funds with intention to generate income, this is income from other sources. Are we clear? So this is your summary of the 3 cases that we discussed. Okay, last case before we go on to the break. Let's say, for example, I received the share application money, right? So pending allotment, the share application money as per the law has to be deposited in a separate account, right? Company law, yes or no? So pending allotment has to be kept in separate account. Now interest on that money, what it will be? Yes?
I think it should be a capital receipt.
Correct. Very good. It should be capital receipt, not income from other sources, because the reason is that interest on the share application money is inextricably linked with the requirement of raising the share capital. Right? So this is inextricably linked to requirement of raising the share capital. Right? This is not to generate any income basically. These funds are to be statutorily kept in the separate bank account. So this is capital receipt and has to be reduced from the public expenses, public issue expenses. So all the issue expenses that you will capitalize, from that you will reduce this. So interest on the share application money is inextricably linked to the requirement of raising share capital. This amount has to be statutorily kept in separate bank account. This is not deposited to generate additional income. So this has to be capitalized and reduced from public issue expenses. Are we clear? Again, this is the ruling of the Supreme Court in Rama Multitech. Okay? Are we clear, students? Yes or no? Any questions? Any doubt? Yes?
Yes, ma'am, no doubt.
Okay. So with this, let us take a break of 10 to 15 minutes and then we get back. Okay, let's take a break. Okay. with respect to this particular PGBP versus IFOS discussion that we are doing is the letting out of the plant and machinery. Okay, I'm not talking about letting out of house property. We have discussed about letting out of house property. I'm talking about the letting out of the plant and machinery. Whether that will be income from other sources or will it be PGBP. Yes.
PGBP income, if it is my systematic and continuous activity, I am involved in letting of plant and machineries.
No. So we are not involved in the systematic. Okay, if it's systematic, that is fine. But what if it is not a systematic activity? Yes.
Then income from other source,
Income from
कभी-कभी आप
other
दे रहे
source? Yeah. So what does section 56 says? Again, it says the same thing as we have seen for the interest on securities. Letting out of the plant and machinery or furniture is chargeable under the head income from other sources if it is not chargeable under the head PGBP. Are we clear? So again it says or talks about like the same way we have interest on security student. Are we clear? So letting out of the plant and machinery, if you look at under the section 56, it is the same thing. So what does it say? Income from plant, machinery, furniture belonging to assessee and let on hire if the income is not chargeable under PGB. So therefore, letting out of plant and machinery, furniture, income from other sources if not chargeable under PGBP. Now let's say for example, if there is a strike in the factory. Now, since the workers are not coming, I thought I will let out my plant and machinery to reduce my losses. Whether it will be PGBP or whether it will be IFOS.
PGBP income,
It will be PGBP. Why it will be PGBP?
because I am letting it out for reducing the losses of my PGBP.
Correct. Very good. So, in order to reduce my losses, I am letting out the plant and machinery to reduce my commercial losses. So, during the strike, I had incurred certain losses, and that is the reason why I am letting out the plant and machinery. Are we getting this particular point? So that is the reason why it will be considered under PGBP and not under the head income from other sources. Are we clear? So if it is related to the business, then in that particular case, it will be considered as my PGBP. Okay? So in this particular case, since I have incurred the loss, and to reduce my commercial losses, I have basically my plant and machinery let out, that is going to be my PGBP. So just write down to reduce the losses if plant and machinery is let out during strike in factory. This is my PGB. Let's say, for example, if I have discontinued the business And since I have discontinued, I am letting out my plant and machinery. Whether this will be EFOS or whether this will be PGBP.
Income from other source.
Yes, this will be income from other sources because now my business is no more in existence. This was PGBP because this is to reduce my commercial losses. Now you are able to identify the differences very correctly. Yes, students, is all the distinction clear? Any doubt, any question so far? Before we move on now finally to section 28. Do you see we have spent time since 6 in the evening till 8 only to understand PGBP versus the other head, the classification of income. The classification of income under the correct head is important because, yes, the classification of income under the correct head is important because, yes, why is it important to classify the income under the correct head?
Losses, everything will be adjusted differently for each head.
Losses, your deductions will be adjusted. Like let's say, for example, if I classify the IFHP, I will not get deduction of depreciation. I will not get any expenses. If I classify it under PGBP, I will get deduction of all the expenses plus depreciation. If I classify it under the income from house property, other sources, then the deductions are different. I have separate deductions in PGBP. If I classify the income under salaries, then obviously I have limited exemptions deductions rather than under PGBP. If I classify it as a capital asset, then I only get the cost of acquisition. Right? I will not get depreciation and all of that. So this is what it is important to classify under the correct head. Pitambur, standby crane or spare crane let out. Yes, it is then the income from PGBP because if it is your business to reduce the losses, you are letting it out. It is PGBP. But it is just if to earn the surplus, if you are not using it, it is on standby mode, then it is income from other source. So the intention is important, Pitambur. Are we clear? Now let us move to section 28 of the Income Tax Act. Finally, we start with or we enter PGBP. What does section 28 says? 28 says the following income shall be chargeable to income tax under the head PGBP. Okay. So 28.1 is the general section. In all the charging section of the particular head, you will see 1 is the general section, 2 is the specific section. For example, you will see this in the salaries also. You will see this under the house property also. You are seeing this in the PGBP. In capital gain also, 45.1 is general section, 45.2, 3, 4 are specific sections. Similarly, under 56 also you saw any other income not chargeable under any other head is chargeable under EFOS. 56.2 specifically provides for certain income. So 1 is always the general and then there are specific incomes which are there under the particular head of income. So 1 is the general head, which says the profit and gains of any business or profession which was carried on by the assessee at any time during the previous year. So what does my 28.1 says? Profits and gains from business or profession carried on by assessee at any time during the previous year. Now we'll break this one by one. What do we understand by the term profit and gains? How do you compute the profit and gains? Yes. How do we compute the profit and gains?
Income less expenses are the profits.
Correct. Income, your receipts minus are your profit. Yes or no? So profit and gains from the business or profession, here the profit here means the profits arrived as per the commercial principles of the accounting. The profit and gains here mean the profit arrived at as per the commercial principles of the accounting. What are the commercial principles of the accounting? Yes.
Accrual and prudence.
Correct. Accrual, your going concern concept, right? Or basically your accounting standards. Keeping in mind the accounting standards, whatever the profits and gains are there, that is computed as per the commercial principles of the account. So I start with my profit and loss account. That is the reason why you see you start with the profit and loss account and then you make certain adjustments for the expenses which are not allowed as the deduction. Are we getting this? So the profit and gains are to be computed as per the commercial principles of the accounting itself. Now, there is something which is also there under the Income Tax Act. To compute the profit, what is that? Yes. Yes, what are
145.
the... Sorry? Presumptive income scheme? No, Chitra. How do you compute the profits under the Income Tax Act?
140 as per 145.
As per 145. Very good. As per 145, you compute your profits. What does 145 says? What does 145 says?
Mercantile system of accounting.
Correct. Mercantile system of accounting, and there is something else also. Yes. Let me see who answers. Employed by the assessee? No. Yes. Cash? No. Income computation and disclosure standard students? Yes or no? ICDS. See, we have introduced in the first lecture itself the ICDS. What are income computation and disclosure standards? Yes, Keith, very good. What are income computation disclosure standards to students? These are given under section 145A itself. To compute your income, these are not to maintain your books of accounts. These are given to compute your income. So profit and gains here means the profit and gains arrived at as per the commercial principles of accounting, but you need to also take into account what? You need to take into account the ICDS as well. Yes, so profits and gains simply means that what you do is your receipt minus your expenses. These are to be understood as computed as per your accounting standards, right? As per the commercial principles of accounting. So you start with your profit and loss account. You add back certain disallowances which are there, and you will also take into consideration your ICDS. Yes or no? So profit and gains will mean your income computed or profit and gains computed as per the commercial principles of the accounting, as per your accounting standard, what your 145 provides. 145 also provides the same thing, students. Yes or no? 145 also tells you the same thing. So, in case you are a banking company, you have a different way of computing the profits. So, you will compute in that manner only. Income tax is not saying that you compute as per us. ICDS are there, but that are specific standards to compute these specific incomes. However, what you will do is you will take into consideration your normal accounting standards which provide for your computation of the profits. So let's just write over here. Let's write profit and gains as determined as per the commercial principles of the accounting. Determined as per the commercial principles of accounting. Then what your 145 says, let's go to 145. 145 talks about the method of accounting. So income chargeable under the PGBP or IFOS shall, subject to the provisions of subsection 2, be computed in accordance with cash or mercantile system of accounting regularly employed by the assessee. So 145.1 says you follow either cash or the mercantile system as you regularly follow. Are we clear? 145.2 says that the central government may notify in official gazette from time to time the ICDS. So see, the power here is given to the central government to notify the ICDS. Now ICDS are what? ICDS have been notified. There is a central government notification which is there. So central government wide notification of 2026, 2016 have notified the ICDS. Are we clear? So let's just write it over here. Section 145.2. Central government to notify ICDS and CG wide notification of 2016 have notified the ICDS. Income computation and disclosure standard. Now, if you look at the income computation and disclosure standard, which are there, now, when does these apply? Right? When does these apply? Income computation and disclosure standards, when does these apply? So for that, we need to look at that particular notification of the CBDT. Right? Now the CBDT notification says that, let us look at that. I'm opening that as well. It says in exercise of the power conferred by 145.2 of the Income Tax Act, the central government hereby notifies the computation and disclosure standards as specified in this annexure to this notification to be followed by all assessees other than an individual or HUF who is not required to get his books of accounts audited in accordance with 44 AB. and who is following the mercantile system of accounting. So basically, ICDS are applicable to all the assessees following mercantile system of accounting. It is not applicable to the assessees which follow the cash system of accounting. Are we clear? And what are the exceptions here? Individual or the HUF not required to do the tax audit. Number one. And second, assessee following cash system of the accounting. Are we clear, students? Yes. So it is applicable to all the assessees except individual or HUF who are not required to get the books of accounts audited. Fine. So profit and gains are to be computed as per the commercial accounting principles. What are my commercial accounting principles? What I follow as part of my regular accounting principles employ. Basically, I will consider all the revenue losses. I will consider all the revenue receipts. I will not consider the capital losses or capital receipts. Are we clear? Yes or no?
Yes, ma'am.
Fine. So let's just write it over here. Consider revenue expenses. For example, loss of stock in fire. This is what? My revenue expense. Right? Damage of goods in transit. These are what? My revenue expense. So these I will consider for calculating my profit. Compensation for delayed supply of raw material. Compensation for delay in supply of my raw material is what? Yes.
Revenue, ma'am.
This is revenue, right? So I will consider all my revenue receipts. For example, compensation for delay in supply of raw material. I will not consider capital receipts unless specifically chargeable. For example, compensation for delay in supply of plant and machinery. Whether this will be taxable?
No.
Why?
First class, I remember you have mentioned.
Correct. So we had discussed this Supreme Court in Saurashtra cement case. Compensation for delay in supply of plant and machinery is a capital receipt, as this is towards sterilization of the profit making apparatus. Right? So this we had written over there. This is towards the sterilization or compensation for sterilization of profit making apparatus. So this is not chargeable to tax because this is a capital receipt. Right? So this is for delay in supply of plant and machinery. If it is for delay in supply of raw material, it is a trading receipt. But if it is for delay in supply of plant and machinery, this is a capital receipt. But now this is specifically charged to tax under (28)(2). So this we will consider. Again, we will not consider the capital expenses unless specifically allowed. For example, section 35 AD. Right? It provides for specifically the allowability of the capital expenditure. Clear? Now, if you look at profit and gains, right? For that, we need to refer to ICDS. Now, if you look at the ICDS 1, ICDS 1 is basically dealing with the significant accounting policies. What are the accounting policies ICDS 1 is talking about? Going concern. Going concern refers to the assumption that the person does not have the intention or the necessity of liquidation of business or reducing the scale of the business or profession or vocation and intends to continue the business for foreseeable future. Consistency. Consistency refers to the assumption that accounting policies are consistent from one period to another. Accrual refers to the assumption that the revenue and cost are accrued, recognized as they are earned or incurred and recorded in the previous year to which they relate. Right? So what does ICD 1 says? 3 accounting policies. One is going concern. Second is accrual. And third is consistency. Right? So you need to follow these 3 principles of the accounting while you compute your profit and gains from business or profession. These are accounting assumptions. Secondly, now we are getting into the another ICDS at this point in time. Right? What is the second ICDS I'm going to talk about is ICDS 4. What is ICDS 4? Let us look into this. Revenue recognition. See, I'm not going to deal with ICDS in separate areas, because what will happen is you will not be able to relate if you read ICDS independently. It has to be read in this manner. It has to be read along with a particular section. You have to correlate and read everything, students. Are you getting it? Now, what does ICDS 4 says? This ICDS deals with the recognition of revenue arising in the course of ordinary activities of a person from the sale of goods, rendering of services, and use by others of the person's resources yielding interest, royalty, or dividend. Are we clear? Now, in respect of sale of goods, let us write side by side. ICDS 4. This is revenue recognition. First, how it says you need to recognize the revenue from the sale of goods. It says in a transaction involving the sale of goods, the revenue shall be recognized when the seller of the goods has transferred the property to the buyer for a price, or all significant risk and rewards of ownership have been transferred to the buyer and the seller retains no effective control of the goods transferred to a degree usually associated with the ownership. Are we clear? In a situation where the transfer of property in goods does not coincide with the transfer of significant risk and rewards of ownership, revenue in such a situation shall be recognized at the time of transfer of significant risk and rewards of ownership to the buyer. What does it mean? It says that in case of the sale of goods, when do you recognize the revenue? Either when seller has transferred the goods to the buyer, or if he has not transferred exactly, when the risk of or the significant risk and rewards of the ownership have been transferred to the buyer. So, when significant risk and rewards are transferred to the buyer in a way that seller does not retain any control. Seller does not retain any control of the goods. Now, what does it mean? Simple, your Sale of Goods Act contract law. Right? So, when I transfer the goods to the buyer, that is when the sale happens. The sale concludes. Or if, let's say, for example, if I'm not transferring on the CIF basis, I'm doing it on the FOB basis. FOB basis means what? Freight on board. So the moment goods leave my factory, the sale concludes. Because after that, the risk of the goods, the transportation risk which is there is with the buyer. Now, let's say, for example, I transfer the goods on FOB basis. The goods moment cross my factory. After that, if goods get destroyed, if there is a fire, if there is damage in transportation, that is the responsibility of the buyer. I have sold the goods. I will recognize the revenue at that point in time. Let's say I have sold the goods on 28th of March and the goods have crossed my factory on 28th. Now the goods reach to buyer on 31st, on let's say 4th of April. I will recognize the sale in the previous year, 24-25. Because I have sold the goods on 28 March 25 because I had sold on the FOB basis. I don't own the risk on the goods after my goods have crossed the factory. Then that's a buyer responsibility. Isn't it? But where, let's say, for example, I am selling it on CIF basis, cost including insurance and freight. then in that case, it is my responsibility unless and until the buyer takes the delivery of goods. Let's say, for example, when you buy the goods from Amazon, will Amazon book the sale? If you order it on 31st of March, will Amazon book the sale on 31st? The answer is no. Because till the time the goods reach my place, it is the responsibility of Amazon. Right? So it will recognize the sale only on the day the goods reach to my house. But if I sell it on FOB basis, I will recognize immediately the goods cross my boundary of my factory. Are we clear? Next is, revenue shall be recognized only when there is a reasonable certainty of its collection. So revenue shall be recognized only when there is a reasonable certainty of ultimate collection. Let's say, for example, in the case of Amazon. Now you have a 7-day window of returning the product, isn't it? Now let's say, for example, if I do not return the product and the 7-day window closes, I will recognize the revenue. But if there is a 7-day window, I will not recognize until those 7 days because there is a possibility that the buyer will return the product. So revenue shall be recognized only when there is a reasonable certainty of the ultimate collection. Where the ability to assess the ultimate collection with reasonable certainty is lacking at the time of raising any claim for escalation of price and export incentive, revenue recognition of such claims shall be postponed to the extent of uncertainty involved. Okay, so let's write down. Revenue shall be recognized only when there is reasonable certainty of collection. Okay, revenue shall be recognized only when there is a reasonable certainty of the collection. And except in the case of escalation price or export. Okay, except in case of escalation price export subsidies where reasonable certainty is lacking. Now, what happens in the case of export subsidies or escalation price? What is escalation price, first of all?
Cost of the product increases later on.
Yeah. So in the case of construction contract, long-term projects, the prices get like the price of raw materials, right? So the contractors usually escalate the price. Now, escalation prices are always uncertain because, like tomorrow, if you are, let's say we are doing the interior work in our house, you are doing painting work. Now, let's say we have done the painting, we have hired a contractor. Now, mid of the, painting is ongoing, he will say the price has increased of the paints that you want. Now, obviously, you will say, no, you told me at the time when you signed the contract, this will be for, like 10,000 rupees. Now you're saying suddenly the price of the paints has increased. So this is always subject to the uncertainty. So there's uncertainty in respect of collection. So in that case, I cannot recognize the revenue only on the basis that, okay, I have a reasonable certainty that my receiver of the services will give me the amount. Right? So in that case, because of that uncertainty, the revenue recognition shall get postponed in case of the escalation price. Similarly, in the case of subsidy, when you get the subsidy, right? When you get the subsidy, again the subsidy when you get it is not certain. Sometimes it is subject to the fulfillment of certain conditions. So then if you do not fulfill the conditions, how will you recognize? So in case of the subsidies, in case of these cases, we cannot recognize the revenue on the basis of the reasonableness of collection. So we have something called as section 145B. What does section 145B says? Notwithstanding anything to the contrary contained in 145. So basically it overrides even the ICDS notified in the 145. Any claim for escalation of a price in a contract or export incentives shall be deemed to be the income of the previous year in which the reasonable certainty of realization is achieved. So export incentives, escalation of price, whatever are there shall be recognized in the year in which the reasonable certainty of its realization is achieved. So let's just write over here. So export incentives, escalation price, recognize in previous year of ultimate realization of or previous year in which reasonable certainty is achieved for realization. Are we clear? Yes. Next, talk about sale of services or rendering of services. It says subject to para 7, revenue from service transaction shall be recognized by the percentage completion method. So basically under this method, revenue from the service transaction is matched with the service transaction cost incurred in reaching the stage of completion, resulting in determination of the revenue, expenses and profit which can be attributed to the proportion of the work completed. Are we clear? So basically what it says is that in case of the services, we will recognize the revenue on the basis of percentage of the completion method. So let's say, for example, I am in the business of developing the software. Now, software development takes years and years. Now, in the first year, I have only completed 10%. But I may have received, let's say 50% of the revenue at this point in time. So I will only recognize 10% in the year 1. Next year, I complete 15%. So I will recognize only 5% in the next year. Are you getting it? So it will be recognized on percentage of completion method. But revenue from service contract with a duration of not more than 90 days may be recognized when the rendering of that services under that contract is completed or substantially complete. So basically the exception is if the contract of service is less than 90 days. Then in that particular case, I will recognize the revenue on completion method. Are we clear? Last one is use of resources by others yielding interest, royalty or dividend. Now subject to para 2, interest shall accrue on the time basis determined by the amount outstanding and the rate applicable. So interest is to be recognized on the time basis. Okay, whenever it is getting accrued. Interest on refund of any tax, duty or cess shall be deemed to be the income of the previous year in which such interest is received. So, interest on income tax refund shall be recognized in the previous year in which it is received. Discount or premium on debt securities held is treated as though it were accruing over the period of maturity. So basically, my discount or premium on securities is to be amortized over the life of security, right? Or period of security. Royalties shall accrue in accordance with the agreement and shall be recognized on the basis unless, having regard to the substance of transaction, it is more appropriate to recognize revenue on some other systematic and rational basis. And dividends are recognized in accordance with the provisions of the Act. So, royalties in accordance with the agreement and dividends in accordance with the Act. Now, what is the section which talks about the recognition of dividend? Section 8. Section 8 talks about the recognition of the dividends. See how we are jumping from one section to another. Section 8 talks about the recognition of the dividend income. What it says, for the purpose of inclusion in the total income of an assessee, any dividend declared by a company or distributed or paid by it within the meaning of section 222A, B, C, D, E shall be deemed to be the income of the previous year in which it is so declared, distributed or paid as the case may be. Any interim dividend shall be deemed to be the income of the previous year in which the amount of such dividend is unconditionally made available by the company to the member who is entitled to it. So what does section 8 says? Recognize in the previous year in which declared, distributed or paid. And interim dividend is to be recognized in the previous year in which it is unconditionally made available to the shareholder. Are we clear? So this completes your ICDS 4. There is also something else remaining in section 145. 145B. What is it which is remaining? 145B says the interest received by an assessee on any compensation or an enhanced compensation shall be deemed to be the income of the previous year in which it is received. Now, this is relevant for capital gains. See, 145, one is applicable for IFOS and PGBP, not 145B. So, you may say that why we are talking about capital gains under 145B. So, 145.1 is saying that income under PGBP or IFOS shall be subject to the provisions of ICDS, which are notified in the 145.2. 145B can talk about the capital gain also. Are we clear? Yes or no? Any questions? Any doubt? Yes? Any doubt till now? Fine?
Yes, ma'am.
Okay. So with this, we have completed our ICDS 4 in detail. Fine. Now, if we look at 145B, there is one more point which is remaining over there. Under 145B, there is one more point remaining over there. What is that? Yes. Sorry. The income referred to in 224, this is 23, shall be deemed to be the income of the previous year in which it is received if not charged to income tax in any earlier previous year. Now, what is this income? So, if you go to 224, yes, this talks about assistance in the form of subsidy, grant, cash incentive, duty drawback, waiver, concession, reimbursement by the central government or the state government or any authority or body or agency in cash or kind to the assessee, other than the subsidy or grant or reimbursement which is taken into account in the determination of the actual cost of the asset in accordance with the provision of explanation 10 to section 43(1), or the subsidy or grant by the central government for the purposes of corpus of the trust or institution established by the central government or state government. So basically what here they are talking about is, so here they are talking about the subsidy or grant which is received from the state or central government or the duty drawback. So let's just write it over here, the last point. Subsidy or grant by the central government or state government or duty drawback or waiver, right? Or any kind of concession or cash incentive, right? Now, except the capitalized, except the one which is capitalized to the cost of the asset, because that relates to the capital asset. This will be recognized in the previous year in which it is received. This is what section 145B talks about. Clear? See, we start, where are we? We are talking still about 28. We just started with 28. I talked about profit and gains. Right? Profit and gains, which I said you have to compute as per the commercial principles of the accounting. Meaning, you will follow your accounting standards. You will follow your normal receipts minus expenses, whatever profits that you get. Right? You will recognize all the revenue expenses. You will ignore the capital expenses unless specifically provided. You will recognize all the revenue income as offered to tax and ignore capital receipts unless specific chargeable to tax. You have to take into account the ICDS notified under the 145(2). One says ICDS, one says going concern, consistency, accrual. These are the principles that you need to follow. Then we talked about the revenue recognition for the sale of goods, for the rendering of services, for the interest, for the dividend, for the royalties, right? And for the cash incentives, escalation prices, right? So profit and gains from the business or profession carried on by the assessor. Are we clear? So you will recognize the losses in relation to the, let's say, stock loss by the fire, then any kind of compensation for the delay in supply of the stock in trade, that is trading receipt. So that you will recognize, right? So these are the any kind of loss in transit, any kind of, losses incurred, let's say, which are in the routine nature of the businesses. All of those losses we will recognize, right? Foreign currency losses or loss of any, stock which is there, any loss from the depreciation in the foreign currency. So all these losses we can recognize, right? So that is something which is my trading loss. Any trading loss or loss due to breach of contract by either party, right? Loss caused by non-recovery of the debt. You recognize the bad debts, right? So these are the losses I will recognize because this is what the commercial principles of accounting provide for students. Yes, if your stock gets theft, if there is a robbery, will you recognize that loss? The answer is yes, because all of these are my trading losses. Similarly, any kind of compensation that I receive as a part of my trading receipts, I will recognize. Yes or no? Loss in the fluctuation of the securities, I will recognize. So all of this we will recognize. These are not to be not recognized. These are not capital losses. All the losses which are there are my revenue losses. Are we clear? Now last part is, what is there? The profit and gains from the business or profession. We discussed about the business or profession. Yes, we had a very, very big discussion right now that what is our business, what is my profession. Yes or no? So, if it is an organized activity, if it is a systematic activity, this is my business. What is my profession? That is also what we discussed. Yes or no? We also discussed about when do we say IFHP versus or salary versus the PGBP, right? When do you say? When there is a contract of service or contract for service. You see whether you are under the direction or working under the direction or control of somebody. You will see that whether you are working for somebody or you're working independently. To whom you are reporting? Yes or no? So these are the important factors which will help you to decide that whether you are working for someone, whether you are under the directions of somebody. So then it is salary. Otherwise, this is PGB. Similarly, for the house property we saw. Alright? If it is my business of letting out, then in that particular case, it will be considered as my, yes, it will be considered as my business income. However, now we have a specific exception for that. We have a specific exception for that. What is that exception? Which says that no income from the residential house property will be chargeable under the head IFHP itself. So, Chennai property case is still relevant. It is not that it is not relevant, but that is only relevant for the commercial property. Right? And then we discussed about, for example, as I told you, that in case of the letting out of the property, the stock in trade is not let out. If the land and building is held as stock in trade, then in that case, the annual value shall be considered as nil. That's what section 23.5 says. In respect of what? In respect of the land and building held as stock in trade for a period of 2 years from the financial year in which the completion certificate has been received. Yes. So that is a specific exception that we have under 23.5. It will not be considered as the deed let out property. Are we clear? Then we saw about this capital gain versus PGBP. As I said, you need to look into the intention, the nature, the quantum, the volume of the transaction. capital asset excludes the stock in trade, right? So you have to identify that whether it is stock in trade or not. We saw that business will include adventure in the nature of trade, but it should not be one of an isolated transaction, right? So if I develop the land and sell the land, that is business income. But if I just sell the land, divide it into plots for the purpose of disposing it off, it's a capital. The securities that I hold is I have to decide based on the intention, based on the revenue, based on the quantum that I have. So basis that I will decide that whether it is capital gain or business. Derivatives are not speculative. Intraday is speculative. Any kind of derivative, future options, hedging, trading, it is not capital gain. Sorry, it is not PGBP. It's not speculative. It is normal PGBP. So I will decide that basis on the derivatives are not capital assets. Right? So I will decide on the basis of frequency, disclosure, intention, right? Then we did about the business under the speculative that if a company is trading in the shares of other company, purchase and sale, it is speculative. But if it is just trading in shares, it is not speculative. If it has primarily income from IFOS, IFHP, interest from security capital gain, it is not speculative. Then we talked about business versus other sources. We talked about dividend is specifically taxable under other sources. Interest is chargeable under other sources, if not chargeable under PGBP. So if it is on surplus, IFOs. If it is inextricably linked to the capital asset, capitalized. If it is inextricably linked to the business activity, business income. Same is with the letting out of the plant and machinery, right? It will be taxable under IFOs, if not chargeable under PGBP. If I'm just letting it out to reduce my losses, then it is business income. In case I'm letting it out after just closing my business, then in that particular case, it will be IFRS. So if it's a lease of commercial asset, it is PGBP. If it is after discontinuing the asset, discontinuing the business I'm letting it out, it is going to be the IFRS. Are we clear, students? Yes?
Yes, ma'am.
Any question, any doubt? See, we revised also everything. And with this, I will just stop the session over here. And I think there will be some MCQs with you. So,
Okay, ma'am, I'm gonna start the
yeah,
MCQ now.
sure. Should I log off?
Yeah, you can.
Yeah. Thank you so much, students.
Hello. Students, you need to join the quiz now, so in order to attend the MCQ session. Uh, do let me know once you join the MCQ session. So, student, each MCQ will be a time-based MCQ, and it will be a 1 minute, 1 minute MCQ. So, I'm gonna start the MCQ now. So, I guess all have answered the question correctly. I'm moving to the next MCQ now. So, I can show the correct answer also. The correct answer is A. Daily allowances received by MPs and MLA for attending session as well as constituency allowance received by MPs and MLAs are exempt from tax. So now I'm moving to the third MCQ. So the correct answer is B. Capital gains from the sale of agricultural land situated within the urban limits are taxable, while capital gains from rural agricultural land are exempt. Now I'm moving to the next MCQ, and that is the last MCQ. So the correct answer is pension received by a retired employee of a state government who was awarded by a Paramveer Chakra. So that's it for the MCQ section. So congratulations, Yogesh. You have answered it correctly from other participants. So I'm gonna stop sharing. Aparna ma'am, you need to.
Yeah, thank you, Dhairya, and thank you all the participants. I think hope you enjoyed the MCQ segments. We are trying to, come at the end to pick up the topics which we have already covered in the last class, and to have a just go through just to make you understand how that you have prepared and just do your assessments. So keep going and do regular studies whenever whatever be the topic is covered in your class. Do all the practical problems given in the study material to have a good grasp over the concepts. That's what I can say you. And definitely, I think hope you are all enjoying. And in case of any suggestions, the faculty from Board of Studies always joins at the end of the class. You can you are really welcoming that you please provide your suggestion if you have any. Any of you?
These board notes, suppose we are writing, but somehow in midst of class we do get missed. So if the board notes are there, we can fill it in our notes if anything is missed. Then
Madam, you are asking me how to present your answers.
no, these board notes, the class notes, sometimes it does get missed to write something in the flow. Okay.
Okay, no, that's these class notes because the faculty is doing the handwritten notes then and there. So we will be uploading the notes after finishing the topic actually, or I will ask the faculty to share the notes in parts also for each class. Okay, I will discuss and ask the faculty.
Okay, ma'am. Thank you.
Yeah. Any other? Anyone else wants to share some suggestions for the LPC classes? Okay, so I think we can conclude today's class. Thank you all. Thank you, dear participants. Thank you, Dhar.
No, thank you, ma'am.
Technical team, we can. Yeah. Thank you.